If your 9:30 a.m. excitement consistently turns into a 10 a.m. depression, you might not be unlucky, but you might be making some of the most common rookie mistakes that'll end up leaving you pretty frustrated with opening range breakouts. Howdy y'all, it's Bull Barbie, your favorite chart reading, volatility loving, breakout chasing bestie. And today we're taking a look at your opening range breakouts because right now your ORB strategy, maybe it's broken more hearts than a Taylor Swift discography right now, but we can fix that. If you've ever bought the breakout and tightened your stop and whispered a little prayer and still got slapped back into the range like the market said, not today, sweetheart, then buckle up. We're breaking down the top reasons the ORB trades fail. And yes, I'm bringing the cold, hard truths. So hold on to your britches, because if we're going to talk about pain, we might as well have fun doing it. So let's get into it. All right, let's start with the big one. I call this the mood killer. Research work by Holmberg, Lombard, and Lundstrom, or something like that, shows that ORB performance improves when you filter for days with large intraday moves and you don't just blindly follow every single trade, every single open. They literally built ORB rules around identifying days with big intraday ranges, and their work shows that the strategy's success rate and returns are significantly higher than zero when those filters are applied. On normal days, the edge is much weaker. An ORB is a momentum strategy, so it needs energy and it needs imbalance. It needs drama. It needs the market to wake up and choose violence. It should want to break some hearts while it fills your pockets, right? But most of y'all, okay, we're out there trying to force a breakout on a day that the market is basically in pajamas, sipping chamomile tea and crying about its ex and calling in sick. If there's no catalyst and no volatility and no reason to expand, then guess what? It won't. It's going to stay home. No drama, no breakouts. Actual studies on public news and data announcements show that the macro events like CPI, FOMC, jobs data, those kind of events are proven to show spikes in volume and volatility, especially around that announcement window. We don't have to take Joe Schmo Trader on X's word for it. The smart guys have already shared their notes, and we have to weed through a lot of clickbait, but it is out there for us to find it. The opening range is like a pressure cooker. On the right days, the days with news, the days with volumes, the day with some kind of catalyst, it explodes. But on the wrong days, it just sits there, warm, lukewarm, disappointing, making you pick what's for dinner while starving that she's complaining. So when you take an ORB on a quiet, low volatility, no news day, you're trying to force chemistry that isn't there. You're saying, I want the climax, but I don't want the foreplay. It's a package deal, buddy. And honey, that's not trading, that's manifesting, and the market does not care about your vision board. It cares about filling orders. The truth is simple. If the day is limp, your P&L is going to be limp. You need volatility to get it up and keep it up. You need volume. You need imbalance. Something to light the fire. You need something that makes the market say, let's move. Otherwise, your ORB is just a cute idea with no personality and no follow through. And you know exactly what I'm talking about because we've all been there. Now let's talk about the second reason ORBs fail, and this one is the commitment issue. A lot of traders think that they're being responsible by waiting for the retest. They're, saying things like, I don't want to chase, or I want a safer entry. Baby, that's adorable, but safe doesn't pay the bills. We need to get technical for a second. The ORB is a momentum capture strategy. The edge, the actual mathematical edge, is in catching that initial expansion away from the opening range. The strongest orbs, these are the bad boys of the market. They don't retest, they don't come back for you, they don't check in to see how your feelings are. They hit it, they quit it, and they leave you on red. Waiting for the retest in an orb is like showing up to the party on 6th Street at 2 a.m. when the lights are off and the music is stopped and the vibe is dead. I don't mean to get too personal, we've all been there, but you see that big, beautiful breakout candle close. You're disciplined, you're patient, you place your limit order right on the top of that candle waiting for the pullback, and then the next candle opens, doesn't even wick down, just goes and runs off without you, maybe with your best friend. You watch it run 10 points without you, then 20, then 50, and now you're sitting on your hands, feeling angry, feeling FOMO, and maybe about to do something stupid to, make it up. And here's the kicker. When you do get a retest, it's usually a weaker, slower, and more choppy move because the imbalance that caused the breakout has already been spent and blown its load on the guys who were ready to go. So yes, retests are a real pattern, but they belong to the break and retest crowd, and that's a whole different vibe. So if you wait for a retest here, you're trading the leftovers. And sure, cold pizza is okay, but wouldn't you rather have that hot, juicy steak? Now let's talk about the third reason that orbs tend to fail, and we'll call this one the silent killer. Let's get personal again. We need to talk about how tight you are. The open is the most chaotic, dramatic, and unhinged part of the trading day. Market makers are hunting stops like it's open season during this New York Open session. And yet there's a lot of traders who are putting their stops 5 ticks below the breakout candle like they're trading a sleepy midday range. Sweetheart, no, that's not risk management. That's performance art. You know it. I know it. All of the #1 traders on YouTube know it too. So let's do some quick girl math on the NASDAQ to prove why this fails. If the average 1-minute candle at the open is moving 20 points from high to low, and this will vary depending on what's going on in the world, but let's say it's 20 points from the high to low and your stop loss is only 10 points. Do you see the problem? You're literally designing a trade that has to fail. You're putting your stop in the way of the market. It's literally in the way out there. Even if you're right about the direction, the normal market noise, just the regular ebbs and flows that the market needs to breathe, will tag you out at a stop loss before the move ever really happens. You think tighter is better because it feels safer and more secure? In some parts of life, maybe, but not in the charts and in the market. Too tight just means that you've got too much friction and you're going to get burnt, not the finish you're after. So orb trades and tight stops just really don't get along. They're not friends. They're not compatible. Think about them like they're the Ross and Rachel of trading. Always fighting, never working out. The open is violent and it doesn't respect your boundaries. It doesn't have to. It needs space. It needs room to wiggle and work some things out. And if your stop is too tight, you're not getting stopped out because the trade is wrong necessarily. You're getting stopped out because you suffocated the trade. So sometimes you gotta loosen up and give your orb trade the breathing room that they need. Or don't take them at all, honestly. Before we recap, I have to give you one bonus reason because I see this on the ranch from time to time. Let's say you see a perfect orb setup and you're ready to take it, but what you don't know is you're driving 100 miles an hour into a brick wall with a full load. You see the breakout, You see that the volume is there, the energy is there, and you buy. But you didn't zoom out and see that literally 5 points above your entry is yesterday's high or some massive daily supply zone. Trading an orb without checking the higher time frame levels is like flooring the gas pedal because the light turned green without realizing that you're in a cul-de-sac or that the other guys are still going through the light. You got nowhere to go. So let your orbs run. An orb needs room to run. If there's a massive resistance level right above the breakout, that's not a trade, that's a trap. The best orbs happen when there's just blue sky above with no resistance, no traffic, just open road for the price to fly. Or on the flip side, nothing between your short and the pits of hell. So always check for traffic before you hit the gas on your trade, right? So let's recap our notes on why your orb trades might be failing. Reason number 1 is you're trading orbs on days with no volatility. So you're asking for fireworks on a day that the market has brought a cute little scented candle. Reason number 2 is you're waiting for the retest. So you're basically showing up after the move has already happened. Reason number 3 is your stop is too tight. You're trying to trade a hurricane with a little cocktail umbrella. And bonus reason number 4 is you're ignoring those higher time frame major levels of support and resistance. So basically you're flooring it into a dead end with a brick wall. So if you want your orb trade, stop acting like badge hinge dates. Inconsistent, unpredictable, emotionally unavailable, you need a plan. When you know where you want to go and how to get there, you'll get a much better result. All right, I know some of you are thinking, okay, Barbie, I know what not to do, but what exactly does the perfect setup look like? Don't worry, I have a specific 15-minute future setup that fixes all of these issues. It defines the risk for you, catches the volatility perfectly, and keeps you at a chop as much as possible. So if you want to stop getting faked out and start catching more of these runs, you need to watch this video and this playlist right here. It should be the only rules-based guide you really need to get started and end up adapting that trade to fit your own trading plan perfectly. All right, click on all the things, trade spicy, and let's get you paid. Love you.